What's up, everybody? Alexander Fibonacci, the day trading champ, and today I'm going to tell you exactly why the market will continue to crash today. All right, let's get right into it. It starts with Tesla and Apple. Now look at these things pre-market. It's almost like a robot is trading them. They look the exact same. Now you say, why does Tesla matter? Well, if you watched the last video, you know why. But if you're new, welcome to the channel. And the reason Tesla is so good to indicate what's actually going to happen in the economy is because it is the leader of tech stocks. It's the leader of this absolutely astonishing growth we've had in the last 5 months. So when you see retail investors taking out a Tesla, the stock that they've so strongly believed in the last 5 months, it gives you a very good indicator as to what they're going to do to the other leading tech stocks, the stocks, the FANG stocks, the stocks that have really pushed us forward these last 5 months. So when they take out a Tesla, it's highly likely they take out of other stocks, and you see it happening right now with Zoom, Apple, and we got some other charts to go over later, but I'm going to post the best trades of the day that's coming right after this video, so make sure you subscribe so you don't miss out on that. Serious money to be made, but this is how we know. With pre-market, we got Tesla and Apple falling, and on strong volume too. Look, it's 6:20, guys. So the market opens in 2 hours for me. So we got plenty of time, and Apple's already at 1.5 million volume. Tesla is already at 970,000. So they're dropping on strong volume. That's always a great indicator if you think the market's going to keep going down. On top of that, guys, the VIX flies up. I mean, look at this chart here. You see how crazy VIX went yesterday. So here's the thing. Now VIX is pretty much in a new territory. We were in a steady, good uptrend here, and then we have a total monster day on the VIX. So there's a lot more room for it to drop down than it is for it to go up as of right now, right? Because if we break through here, then we're going to have a new VIX risk range. You know what I'm saying? But as of right now, we have lots of room to go down on the VIX, which would mean the market is going to go up today. But here's the thing. We got the jobs report coming out at 8:30. Now, what can we get from the jobs report? We could get a very positive reaction initially. So the VIX would drop down lower to the bottom of the range and then shoot up again because it would be at the bottom of the range. Very unlikely for it to get below that, because that means we pretty much reverse all the losses we've had lately. The 120 points we dropped yesterday, we'd have to reverse all those points to get back down here. So as we're getting closer to the bottom of the VIX, we get the higher chance that we're actually going to break out and go crazy again today. So I believe that this jobs report will be pretty decent. It's going to be a positive reaction, and the market will go up first, most likely. VIX will come crashing down a little, and then boom, we get a crazy spike because everyone's going to realize that, yeah, sure, the jobs report is decent, but it is not enough to keep pushing our market forward. Like I said, the tech stocks, they're out of gas, and they're already starting to sell off before the jobs report. Now, usually what you see going into these jobs reports is that, institutional investors are going to hold off on selling or buying. They're just kind of leave it there, the stocks there, and they're not really going to do much until that jobs report comes out. That's when you start seeing a huge spike. But the fact they're already selling right now just shows you how little confidence the institutions have in these big stocks right now. And, it makes sense. You look at the charts. Tesla is pretty much, it just kept zooming up, and now it's finally time. They're going to take profits, and we went over this in the last video, so On top of that, we went over Tesla and Apple, and obviously Apple has a huge part of the S&P 500, but what else does? Amazon. Now, Amazon looks like it could just be getting started. You see a huge dip in strength, obviously, yesterday, and on top of that, you don't take a trade just off of one indicator, but you look at other things. So we see that obviously we had the huge down day that we predicted yesterday and everything. But on top of that, we got MACD looking very strong for us, as in, to the downside. So we got lots of indicators, lots of things that are telling us that, shit could go crazy. So I'm going to get into the next chart and how it can affect the market today. Alright, look at this, guys. We got Shopify as well. Now, Shopify and Amazon are pretty similar, as in, they're kind of online stores. They're not the exact same business model, but very similar, and they both thrive in the market conditions. On top of that, we got Netflix as well. It's absolutely tanking right now, and you see what's happening on all these, right? The MACD, we're getting hooks, or we're about to converge already. So usually when the MACD is above 0, and the black line crosses, that's when it's time to sell. And you see all of these black lines are starting to converge with the red line. Now, some of you might think it's ridiculous to look at an indicator like that, but the fact is it is not, because you're combining it with what is going on in the market and what you think is going to happen. It just gives us, maybe a plus 10%, plus 20% chance of what we think is going to happen to actually take place. So we got Netflix, Shopify, Facebook. They're all converging right now, which means this could be the start of it and we can continue into it. So this is why we're so confident that the market will continue dropping. You see that if the institutional investors really wanted to buy the dip hard, we'd already be back above 3,500, because that's obviously a super good psychological level for the market. Why would they not want to stay above 3,500? But you see, the buyers are just not that strong still, and the norm is buy when it's low, buy the dip. Yet we're not really doing that here. So it is holding off for now, but with the VIX, like we said, being able to fall down, but then the market not go too much higher, but then we come crashing down when the VIX goes back up today. We got Apple, Tesla, and all these huge stocks that institutional investors are taken out of. So everything is looking great today to the downside, and it is looking great if you know how to trade to the downside, or if you already took profits from the crazy bull market we've had. But guys, all good things do come to an end, and this is a start of a new good thing if you know how to trade it, if you're subscribed to the channel, and if you're up to date on exactly what's going to happen. So at the end of the day, nobody can know exactly what's going to happen, but this is my analysis. This is what I believe will happen. Make sure you study the charts yourself and understand what you think is going to happen. With that being said, I'm Alexander Fibonacci, the day trading champ, and I'll see you guys in the next video.